Hello, my name is Alkanne Houtzager and I blog about impact investing. I blog in Dutch, but because a lot of the reports and publications are in English, I blog about the content, so you might check out the original publications yourself. I have a special interest in impact investing in the Netherlands, and I wrote an article about the recent past, the present and the future of impact investing with special paragraphs, meanwhile in the Netherlands, because we have been an early adapter with thematic funds and we have a couple of special banks. And we have actually, globally speaking, quite an impressive market share. We might be world champion. Last month our institutional investors launched a report claiming they have 24 billion euros in impact investments. And if you add to that the almost same amount of assets under management with our 3 sustainable banks, you could say that with that we actually have about 75% of the 60 billion US dollars that the global impact investing network guesstimates for the global impact investing market. My special focus in impact investing is on inclusive impact investing. So mainly public equity impact investments, and crowdfunding for impact is also an exciting area to monitor. And this month in the impact investing news blog for March 15th, I open with distribution news. If you have an impact investment product, it's important that you have your marketing and distribution as best as possible. And our sustainable ASN bank has a microfinance fund, which is now being offered by one of our big banks, ING Bank, as part of their fund portfolio. The ASN Microfinance Fund actually was listed on the Euronext stock exchange end of last year, but this of course adds another important channel for their sales. Our other super sustainable bank, the Triodos Bank, has launched its annual report. They've done very well. They've actually shown double-digit growth numbers since the financial crisis. What I find very interesting is that they say that the main driver for the energy transition, that's to renewable energy, in the Netherlands is now not so much government policy, but actually individuals, entrepreneurs, and communities. So we are basically going Danish, because the Danes have financed many local wind energy parks through their communities. I'll get back to that later. The Luxembourg Stock Exchange has good news. It has listed her 100th green bond. Actually, the preferred name in this case is Climate Awareness Bond, because it's another bond by the European Investment Bank. The Luxembourg Stock Exchange has 93 green bonds listed, and they are very high quality because all of them have been verified by the Climate Bond Initiative verifiers. So you are sure that you're buying a good quality green bond. Very nice green bond was issued by the New York Metro Authority, 500 million US dollars. And I like it very much because it's accompanied by a retail campaign. They have millions of travelers every day. Using public transport helps lowering carbon emissions. And with this retail campaign, they give their customers the chance to actually participate in this green bond investment. And the Apple bond, of course, last month is a very important one, because the most preferred company in the world launches a green bond that is going to help the growth of the green bond market, hopefully. Then we have interesting news in transparency. Morningstar, the rating agency, has published its ESG reviews of 20,000 funds. It's a paid service for their institutional clients. But of course this has been big news, and since I actually blogged, MSCI, the competitor rating agency, has now launched their reviews of 21,000 funds. A big American bank, JP Morgan, has launched an ethos platform for sustainable investment for its advisors. The first theme is climate. Next will be Catholic investing. What's interesting is that they say that as ESG integrated investment has shown to have the same returns as traditional investments, it's now the time to do this. So that statement, of course, is very helpful. And we have some local news. We have Think Capital in Amsterdam offering exchange-traded products. They have an interesting sustainable world ATP, which I have bought when it was launched, and it's done very well. It's one of their smaller products, unfortunately, but now they have integrated the UN Global Compact in their portfolio, so lifting the whole portfolio to a higher sustainable quality level. And since I have blogged, they have also signed the United Nations Principles for Responsible Investment. So very good developments at Think Capital in Amsterdam. In the Facts and Figures department, sort of an agenda-setting report by the British social investor Big Society Capital. They have been very important in the G7 project, the Social Investment Task Force, and they actually looked at a couple of the country reports that were published for this task force 2 years ago already, and they are highlighting 5 countries, the model of Denmark, which I referred to, local communities investing in renewable energy. The aim of the brochure is actually democratizing social investment, and which are good models for the UK to copy. Basically, that's the same name as inclusive impact investing. They looked at crowdfunding in Italy. They looked at the quite sophisticated social investment system in France with the Finançol label. They looked at the United States and these Calvert notes that are being copied all over the country now, different themes, different areas, different regions, I meant to say. And for the Netherlands, they looked at our green funds, a tax relief system, which is unfortunately being abandoned by the government. Right now, they still hold 4.3 billion euros. On average, the investment is quite large, but I also expect there's big institutional investments in these funds, so that might be more inclusive than I thought. I was a bit surprised that they would look at our green funds, because we have 3 super sustainable banks with about 24 billion euro under management. So I wondered why they didn't portray these banks, because even though these banks have a small market share in the Netherlands, I think they're setting an example, growing very fast since the financial crisis, and their offering and their strategy has had an enormous effect on the Dutch banking sector. And actually one of those has a charitable status, tax relief, Bank. Now that's a very unique bank. It's actually a private family bank for the Brenningmeier families, descendants of Clemens und August, who started the department stores in Germany. And this bank has charitable status, tax-exempt status, because they have the Scopus fund, which is clearly an impact investing fund. And Bank has also hired 2 top women in impact investing over the last year, so they have great ambitions to do more. But you know, it does make me wonder why the other Dutch sustainable banks wouldn't have this special tax status. A very unique report by Barclays UK Wealth Management, co-production with their finance quant guys that had a hard time figuring out all these emotions and norms and values combined with investing and philanthropy. The brochure looks at both, and it's an interesting brochure. It's a bit thick, 30 pages, very interesting data, different views. They come up with a social credit framework on how to approach impact investing. Start carefully with exclusion, and their model starts with exclusion, then a big part goes into tax relief investments, which you have in the UK. And then it goes on to more sophisticated impact investments. It's a very interesting model. They have Jack and Jill and James as examples. It looks a lot actually like my impact indicator from a sort of return point of view. Also from the UK, the charity minister has stated when the budget was launched that social impact bonds will be the preferred finance instrument for the charitable sector. That has caused some reactions in Britain, obviously. In the Netherlands, we have seen the impact measurement experts organizing themselves in a consortium, always a good thing. And in impact metrics IT, Cinzer, which used to be the social evaluator and is an IT platform for social return on investment, it has integrated the Global Impact Investing Network data system, IRIS, in its platform, and also the IFC system. IFC is the International Finance Corporation, which is part of the World Bank. So that platform seems to have it all. And lastly, a portrait in Forbes of a small impact investor, very special person, Nathan Mackenzie Brown, who works as an online sales manager, doing pretty well, making $60,000 a year, but he only needs $20,000. Then he has this aim to donate $3,500 US to charity in his lifetime, paying back his college education to society. And the $20,000 that he has left, he invests as an impact investor. And he made a loan to a friend who couldn't get a mortgage for his house. He loans money to a local public, sort of social transport initiative. He has some nature conservation notes. But he also suggests lending money to charities, not only donating, but also lending money to charities. Very special person. And he's now sort of foreman of the tiny house movement, where you live in a very small place, so you make a very small carbon and resource footstep. Interesting article. I hope you like the blog, and links are all there. Hope you find all the content inspiring.